The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Well, the aggressive growth stocks that we're going to be talking about this time around come with very specific directions. Don't judge them by their names. And of course, those directions issued by our aggressive growth strategist, Brian Bolan. Who else would?
Who else would come up with stupid, crazy, nonsensical statements like that, right, Terry?
Well, once we get into them, it'll probably become evident. Cross country, for example, CCRN, you wouldn't judge by the name that it's a staffing organization.
Right, you know, I looked at the name, I just saw cross country and CCRN, and I saw, you know, it fit on my criteria for a aggressive growth rank buy stock to preview or to review here.
Yeah, you'd think it was a company that recruited runners.
Yeah, I had no idea what it was doing, but when I found out it was cross country healthcare, I was like, oh, okay. Yeah. And then a little bit deeper in, we find out that it is the staffing concern. And obviously, you know, staffing in the healthcare field is a big concern. We've seen a lot of reports over the years of, you know, the shortage of nurses. Now starting to see a few reports about the shortage of doctors as well. So it's a number one, Zacks number one ranked stock, which is our strong buy. It has a growth score of A and a value score of F. And Terry, you already know what I like about that, right?
Well, why don't you just tell everybody? Free yucks and grins.
I like the big divergence between growth and value. Growth investors are looking for, you know, paying up and getting some extra growth. Value are looking for something that's on the cheap, beaten down, and has prospects, you know, not as good as growth in the immediate term.
Okay.
So that's why I like the big divergence there, and that tells me that it's the right thing for growth. We saw a big beat last quarter, and the stock, you know, really responded, moving up 10% after the report. So that's always something good to see. But we do have a stiff valuation right now with this company, trading 40 times forward earnings, or just maybe a little bit above that. You're going to see that when a company is just moving into the profitability and is only earning a couple pennies per quarter. So you only have, you know, 5, 10, 15 cents per share per year. So that gives that valuation that real inflated feel, you know, where it is 40 times. So a few more quarters where the earnings estimates continue to move higher, and you're going to see that forward PE move back down.
All right, and just to clarify, the real name of the company is Cross Country Healthcare.
That's correct.
Okay.
I mean, it says here on our chart right here, just Cross Country, but it's Cross Country Healthcare.
Okay, if somebody wants to look it up, they've got the right name.
Right, and CCRN, the ticker.
Okay, thank you. Cyberonics is the next one, CYBX. Now this one may be a little bit more apparent because you wouldn't think that it's a medical device maker.
No, you wouldn't. Yeah, you know, a lot of the names that we've been previewing, especially in this segment, you know, anything with cyber in it has something to do with online, you know, cybersecurity, cyber software, all those sorts of things. So when I saw Cyberonics, I wasn't sure, you know, what it was. But found out it is the medical device maker, and it makes devices for epilepsy, for depression, and heart failure. So all those things are very important. It does carry that Zacks number one rank. It's a strong buy, and it has a growth style score of B, a value score of C. So not that complete divergence that I like to see, but
yeah, but you'll settle for it.
I'll settle for it for this time around anyway. The most recent report was a very good one. They beat by 9 cents or 14% as a positive earnings surprise, and that's what the PES on the chart stands for, positive earnings surprise. So that's pretty big, you know, and this is the other thing that really excited me about this company. They posted revenue of $81 million in the most recent quarter, and over the last 5 quarters, all the revenue was pretty stagnant in that $70 million range, and I think the one that is furthest to go of the 5 was $75 million. That was their top amount. So they were in that 71, 72, 74 million recently of reported revenue, now kicking it up to 81. So we're getting to see that revenue growth that I think is so key to an aggressive growth stock like this.
Yeah.
So as we move forward, we'd like to see more revenue growth from them, and I think we can really see the stock kind of pick up from here.
All right, do you own either one?
I do not.
All right, check out more stocks, stock picking strategies, and stock commentary on our website, Zacks.com. If you're not there already watching this video, just get on over. You can link to it all right off the homepage with Brian. I'm Terry Ruffolo.